Good morning for this Thursday morning, May 2nd. Just want to update you here on the VIX trade, VXX, the ETF, VXX, the Fear Index, VIX, right? As you recall, I'm still long at $19.19. Yesterday rallied quite hard since the market dropped, all right? And the market actually hit $19.79. Okay, but we're back to 1932. The market has opened up higher today based on the unemployment numbers that came out earlier this morning. So I'm still long the VIX, looking for the market to maybe come back down. Again, you know where my hard stop is. If this market closes below the $18.23 on the VIX, I'll be out of this altogether. So I'm still holding on to this trade here. But I'll tell you what, if the market is able to, the actual overall market, the E-minis, if the E-minis are able to actually close above that 1593 and a quarter, I'll just go ahead and actually exit this VIX trade and won't even wait for it to close below 1823 on the VIX. I'll probably just use the general market as a rule on that. All right. Because what I'm thinking now is, look, if at this stage, if the market's able to take out this high, all right, I think the market could go much higher. Again, if the market is able to, close above the 1593 and a quarter. We have a couple days closing above that level. I think we can run quite a bit to the upside. Again, this pullback from the 1593 and a quarter down to this low yesterday, when the market started selling off to 1576, the market came back, closed at 1577, is opened up higher, and it looks like we want to try to challenge those highs again. This market is strong. Remember, the places to re-enter this market in the past have been, right in this area, right in here, and obviously right in here at the 50 exponential moving average. It's very difficult for me to, go net long in this area. I would need to see the market close above these highs and show me that this is really healthy and wants to get above those highs and break up through 16. Or I'm going to patiently wait for the market to pull down into some sort of support level. And I'd be looking at this prior swing from this low to this high before even attempting to look to buy this market on a pullback. Alright, so again, for me to buy this market on a pullback, I would want to measure from this low to this high, and I'm looking at the 38.2, the 50, and the 60%. It'd be very difficult for me to buy it in here. Again, if the market's able to close above that high at 1593 and a quarter, maybe a couple days closes above that high. Let's see how, if we can start breaking up through the round centile number of 1600. That would be extremely, extremely strong. Okay, let me show you the E-mini S&P 500. I want to show you a couple things that transpired yesterday that were actually real nice trades. The market opened up lower from the prior day. When the market opened up down in here, all right, and rallied back up to this pivot high right in here, and then came down after creating that first half hour's range. What I like to do is, after that first half hour's range, wherever the market typically breaks to gives me some type of general direction of the next leg in that direction. So the first half hour transpired right here. So the half hour range was that high and this low. One of the trades I like to put on is if it's in the overall direction of what I do, and you can see that all these bars were red. So as the market broke down through the low of 1586, I was looking to go short immediately on a sell stop at 1585 and 3/4. And that typically, that type of trade is able to give me anywhere from 1 to 2 points immediately. And so that's exactly what it did. So the short yesterday at 1585 and 3/4, immediately the market dropped down to 1582 and 3/4. So it ran 3 full points before starting to retrace. So that was a nice trade to the downside right in here. Now as the market started coming up off that low, we know that the trend is down. We want to look at the hot pink line, which is the 50 exponential moving average, and we want to look at that deep purple line, which is the 200 exponential moving average. So as the market pulled up into this area between the 50 and the 200, all right, that is a great area to short the market, all the while putting your initial stop, your buy stop, your protective stop, your catastrophe stop above the daily pivot of 1589. Your initial stop would be above that. And as you can see here, it took the market a while to start to move in the direction in which you were anticipating, that was down. So eventually the market started coming down and hit all the profit objectives to the downside right in here. So not a bad day yesterday, day trading this market. So market closed near the low of the day as well. Market has opened up higher today based on those unemployment numbers, and as you can see, the bars turned green right here, which was giving you a buy indication that the market should move higher. Again, this does it automatically based on the software that I developed, based on a lot of the core principles that I teach. So look at that, turned green, and the market has run up quite a bit. So we've taken out this high, which I deem is rather significant. The 1586 and a quarter high has been taken out to the upside, indicating further that the market should continue higher. So at this point, I would measure from today's low to the high, and I'd wait for a little pullback here. I would say the 38.2% retracement at about 1585. Anywhere from 1585 to 84 and a quarter back to the 200 right in here where I'm moving my cursor, the market should bounce. So again, still long the VIX. Let's go back there real quick. Look, at VIX is only 1929, hasn't been doing a whole lot. We'll see if the market starts moving higher from there. And again, just showed you just a couple nice E-mini futures trades that you could be looking for. Again, the market opened up from the prior day, opened up below the 50 and the 200, created a nice range. Once it broke down through that first half hour's range, could have been a seller in here automatically as it broke, made 1 to 2 points in there. Patiently wait for a pullback into a logical resistance area, again between the 50 and the 200 where the market sold off again. And again, who says you need to look to do any other trades after you've got 2 winning trades before noon? All right. So hope that helps. Again, I want to make everybody aware that Doc Severson will be closing the door very shortly to the Options MD program. I know this is annoying. I'm working on a computer that I typically don't use. So I urge everyone go to optionsmd.com and check out what Doc has to say there. Talks about the program, what you learn. Again, we'll be closing that down in the next couple days for sure. So if you're at all interested in options trading, again, I urge you to go to optionsmd.com and just check it out. All right? Hope that helps. Have a great evening, or a great day, rather. It is a little after 10 o'clock, so we still have a long trading day to go. Let's see if we can make a little money here, okay? Have a great day. Bye for now.